Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. Cross-border payment services is not only growing rapidly, but is morphing significantly from its initial conception. On this episode, host Craig Jeffery talks with Daniel Lynch, Payments Innovation Manager at SWIFT GPI, on the current situation of international payments. Topics of discussion include the uptake of GPI, new developments, and the plans for expanding the value of proposition. Listen in and learn how these new developments are important to corporate treasury groups and bankers.
Today's episode is SWIFT GPI Payments. It's probably better than you think. I have a guest speaker with me today. His name is Daniel Lynch. He's the Payments Innovation Manager for the Americas at SWIFT. So just by way of some background, SWIFT GPI is a cross-border payment service which has been out for several years, and not only is it growing rapidly, it is also morphing significantly. I had the pleasure of hearing Daniel Lynch at a SWIFT Partner event, and he provided an update on GPI, and I wanted to make sure that the Treasury Update podcast audience had a chance to get current information about the uptake of GPI, new developments, and plans for expanding the value proposition. Here's some information on Daniel. He joined SWIFT in 2015, and as I mentioned earlier, he's the Payments Innovation Manager for the Americas, and he also did work for SWIFT in the Americas on analytics, reference data, and business development. And I want to welcome you to the Treasury Update podcast, Daniel.
Hey, thanks so much for taking the time to talk to us today.
So, Daniel, I'd like you to start with a quick summary definition of SWIFT GPI, and I know you and I have had some conversations about, is it a product or a rolling initiative, and what's different about that? But give us the quick overall definition.
Yeah, I think the folks here at SWIFT, we've been lucky enough to be a little bit the victims of our own success with this, in that a lot of people associate GPI with the things that are live today as though it was a one-off product or a one-off initiative. In reality, when we started this, we had this idea that GPI should be a rolling initiative, and that each year we'd take a look at friction in payments and ask, number one, what we can do to mitigate that friction, and then number two, the stretch ambition, what can we do to eliminate it entirely? So I think the best framework to think about it is a little bit of like GPI yesterday, today, and tomorrow. What a lot of people think GPI is probably the initial conception that we came together to create with a number of the GTBs about 3 years ago, where we decided to tackle some urgent issues, namely, can we track payments beyond who your immediate correspondent is and the end beneficiary? Who are these other parties that previously was like a black hole? Can you accurately trace it across these parties with transparency on who is the responsible actor at any given moment, who's applying fees, deducts, FX rates? We wanted that remittance information be transferred unaltered from initial ordering to end beneficiary. We were looking to try to get same-day value, and of course, a type of settlement finality via these confirms of the end bene credits. That is generally, when we go out and talk to people, the tracker, the same-day value, what people associate with GPI, and we're immensely proud of what we've done, but it's a bit more. We'll probably have a chance to talk about some of the newer services that we're developing this year, but some interesting examples last year were when we initiated the stop and recall service that allows you to irrevocably stop a payment in flight, be it a duplicate, a fat finger, fraud, and then additionally the universal tracking.
So the revocability, this is, as long as you catch it before it makes it to the actual transfer of funds at the final institution. Is that right?
That's correct. The way it works is that SWIFT is able to reject the payments at a network level if it's at an intermediary or a correspondent. And let's imagine that even it does arrive to the beneficiary institution or even credits the end beneficiary account. At the very least, there is a structured way of doing these stops and recalls with an SLA on responses.
Okay, so is it an irrevocable transfer once it's settled, or is it only revocable up until that point?
The beneficiary institution or account obviously have the ability to make a decision about that. It's at the intermediary level where it's irrevocable. But again, it's a vast improvement, even at the beneficiary level, over what we were doing in previous years. Essentially playing telephone across a number of correspondents without having a direct line of communication with the end of any bank.
Excellent. And the universal tracking number, I know it's got a very interesting acronym, but what's the purpose of that, and where does value come into that? Why should a treasury person care versus an operations person care?
Sure. So I want to invite anyone listening to pronounce it any way you want. We hear people saying the UETR. We've also heard the UTR, which is interesting. Whatever your preference is, we're happy as long as you're using it. What we decided last year is, a lot of folks are always asking us what the GPI adoption stats are, right? And the interesting thing about instituting the usage of the UETR across all banks is that essentially 100% of payments are traceable while they are still on SWIFT. It's an important distinction because we worked really hard to also reach out into local market infrastructures. So it's not just like a SWIFT payments initiative, but really an end-to-end global payments tracking. We've worked with the 90 or so market infrastructures that use SWIFT as their messaging layer, but also with the Fed and CHIPS and the Bank of Japan and a lot of other interesting systems that represent a fairly significant volume of NMAUs on payments.
Yeah, the visibility to payments, I guess while it's in SWIFT, obviously once it gets to an endpoint, it maybe passes from one bank to another. If it's a correspondent, you might lose sight there, but basically while there's visibility into the SWIFT arena, they could see it.
If you don't mind, I really would like to underline too how we come about these decisions. Initially, it was us and a number of the GTBs, the top correspondents, who got together and decided that things were urgent enough that we had to create this tracker, that we wanted to have an initiative with same-day value. But each year, as more banks, and I shouldn't say banks because it's ultimately a larger community of anyone who's really dealing in payments, be they banks, investment managers, custodians, money service bureaus, we get all of the current GPI users together and we hold a process that's not dissimilar from, I guess, like a political primary, where we do road shows and get, say, everyone in North America could make it to New York, or Latin America to Miami, or in Beijing and Istanbul and Belgium. And we ask everyone, what still has not been tackled? What additional friction do you still feel? And at the end of the year, we prioritize how to try to roll those out the next year. So that's how we moved from having tracking same-day value year one to instituting stop and recall and universal tracking across all SWIFT payments year two. And then, of course, this year we have a number of interesting and very diverse initiatives, from our pre-validation API to our new case resolution service, exploring some instant or close to real-time corridors for GPI payments. Those are all, by the way, things we're certainly building this year. We also have some interesting proofs of concept around like a request to pay API and using GPI as a settlement layer for smart contracts on distributed ledgers and blockchains.
So there's a lot going on. Yeah, let's just spend a moment, Daniel, about hype versus reality. The concept of what's the take up? How is GPI growing? Obviously, there's more features being added, but what's going on? How many banks are using it? What's going on with growth?
Certainly. We have over 3,500 institutions currently on GPI. That's out of about 11,000 possible SWIFT participants. The volume is even higher penetration than that. We have about 55% of payments being sent as GPI, and potentially with the institutions that are doing onboardings now reaching over 80. There is an important distinction though too, as I was noting, as we hold these workshops and work with the community to try to create these new services. We are going to have a vanguard, if you will, of institutions that do want to play with the pre-validation API, that want to try to see if they can send some of these payments cross-border in a maybe not instant, but like within minutes SLA. But the flip of that is that we also are taking everything that was GPI 3 years ago or 2 years ago and trying to make it the new, really breaking out from GPI as an initiative into the expectations of any SWIFT member. So as we noted last year, we instituted the usage of the UETR across all payments, whether you're a GPI member or not. For next year, as many have heard, we are instituting the universal confirm. So asking that minimally all payments instructed customer credit transfers instructed via 103 on SWIFT be confirmed, and we will gladly work with institutions that want to confirm all payments. Let's say, for example, a cross-border payment that's done a few SWIFT legs and then has the end mal over the Fed.
The universal conform you said against 103. 103 is the bank-to-bank wire transfer, whereas an MT-101, right?
A wire, yeah. It's a customer credit transfer with like an underlying customer. We also have tracking coming out for the MT-202s, or the general financial institution transfers, generally used for funding and other purposes, but we're not rolling out the confirm on that one just yet.
Back on the growth and take-up, I think you listed some of the organizations, but I'm not sure I picked up on what's the growth quarter over quarter in terms of percentage growth. Is it tracking where you want? What are we seeing?
Yeah, I mean, it's there's, again, I think probably three streams there. Number one, the adoption for us has been far more than we could have expected. We were hoping for a number by the end of this year in terms of sent traffic and confirm that we're already meeting in a lot of regions. Secondly, just to repeat the sort of lowest common denominator point, whether folks join or don't join, all SWIFT payments are going to essentially be trackable and have an NBENI confirm by autumn of next year. And that's independent of whether people join SWIFT or not. It's raising the expectation of how payments are to be processed and responded to on the SWIFT network. And then thirdly, I guess in terms of performance, as we know, there's a series of asks that each GPI institution do. It's a little funny. It's like karmic. You get what you give in GPI. So it's great to have payments confirmed when you send them, but we ask that you also confirm when you're the BENI institution, right? Another that's been exciting is the speed at which these payments are credited. We were unsure a few years ago. We were saying, can we really get 90% of payments settled same day as value date? And we actually have over 95% now, and I think most surprisingly, 53% within a half an hour.
Yeah, within 30 minutes, that's excellent. I mean, it's the individual user experience when we look at some of the rapid transfer methods that we use. We've gotten used to, within a minute, a transfer moves, and why does it take a week or most of a week for cross-border transfers? This is pretty impressive that it's been moved up to 53% within 30 minutes.
And we've had some interesting stats on that too. Forgive me, I don't have the pie chart in front of me, but one of the things that GPI has really enabled that we're really excited about is really diagnosing why sometimes payments take so long. So we got this 53% that's happening within a half an hour, 95% same day. Of the percentage that there are issues with, we really have gotten really great data around, when is it a currency control? When is it a local regulation? Because those things are sort of intractable. But by the same token, as we have those springtime feature function primary elections, as I've related, we have a lot more information about like which payments fail because you have insufficient, incorrect, or incomplete like end beneficiary data. And to that end, where we can make a difference, we're rolling things out like the pre-validation API.
Interesting. Yeah, that concept of now you've got visibility to where payments are. You also have visibility to where they're getting held up and why. That's a very nice benefit.
And to that end, actually, we have, I've mentioned the pre-validation API, but I think it's very important to mention that we also have a sister initiative there. The pre-validation API will allow any initial ordering institution or also a correspondent to make direct calls to a beneficiary bank and ensure that an account exists and then it's tied to the right underlying beneficiary account holder. By the same token, we've rolled out another API-based service, optional API. There are other ways of interacting with the service for case resolution that I think is quite powerful. It's a way for a correspondent or a BENI bank to reach back to an initial ordering party to fix a payment in flight. So we can think of a payment where you realize that you need a date of birth for an initial ordering party. It's very hard today. Let's say I'm a nested correspondent, maybe two correspondents into the serial payment chain. The way things work today with the Wolfsburg recommendations and KYC is that folks generally have direct messaging relationships open with other institutions they hold accounts with. I mean, if you're a nested correspondent, it's highly unrealistic to think that you would have a relationship with all these initial ordering banks. And to resolve an issue, you're essentially playing telephone, right? Asking your correspondent to ask them to please supply you with a date of birth. So, or, incomplete debtor information or a number of other reasons a payment may be held up. In introducing this API-based service, we're hoping that, a correspondent will be able to reach directly to an initial ordering institution and essentially DM them, which is like benefit one. But we wanted to go a little bit beyond that too, where you can have an audit trail of like, did this case resolution request get delivered? Has it been accepted? Is there an SLA around responses? And I think most importantly, we've codified the calls using the ISO 20022 data dictionary, such that once it is delivered to an initial ordering party, perhaps you can fully automate it and make those things less labor intensive. So you can imagine a world where you receive a call for a date of birth, and it's very simple to write a few lines of code like, if name and name list return date of birth, and significantly lower the effort around those types of inquiries, investigations, exceptions, and claims.
So you just said a ton of things, which was great and packed in there very densely. So when you say DM, can you describe what that means?
Apologies, I might be being a little millennial here. That's a direct message, right? So apologies for that. But again, essentially, we're all too often playing telephone, where you can never ask the responsible bank for the data that you need to repair a payment or for push it on for further credit. And we want to create a way to do that in the most streamlined and automated way possible.
And so the direct messaging piece is delivered through the API. Is that what you're saying?
Yeah, it's an API call, and we're sort of leveraging the existing tracker as a bus, right, to route these calls, right? Okay. So I can route directly to any bank that I might need this information for. As I noted, again, sort of democratically with our membership as a cooperative. In this case, we built it with our members, but we also invited Pega, Appian, and Seracom along as the primary providers of these case management solutions to ensure that it's not just, direct messaging to solve one of these issues and getting some type of audit trail is already a vast improvement over what happens today. But we thought, again, if we could codify the most frequent, exceptions and investigations, you'd really make significant progress in automating, these repairs.
I want to go back to and unpack pre-validation a bit. You mentioned the process of pre-validation is validating that the account information, et cetera, is done properly ahead of time and using an API to do that. Can you explain that process maybe just in a little bit more detail, and then I'll ask you some questions on it?
So what we've learned at SWIFT over the past few years, and I think what largely fintech community and a lot of the banks have learned, is that it's interesting to do proofs of concept and experiment, but there is a time to execute, right? Where especially in these services that imply that network effect and capillarity will be essential if they're to be of any value at all. So the idea that we had with the pre-validation API, which is essentially already live, we call it the early adopter program, is that we're going to let anyone who wants to participate, and that's regardless of whether you're currently a GPI member or not. As long as you're a bank connected to SWIFT, you're welcome to join the pre-validation family, if you will. We've kept the scope of the calls down to just the verification that an account number exists and that the account holder is the correct holder of that account, precisely because we want to build this capillarity and usefulness as fast as possible, and then later evaluate additional calls that could serve to make this payments process more frictionless. A little stat, because I know, anecdotal stat, we need a little more science behind this. I know that it sounds like just verifying an end beneficiary account number and whether the correct holder is associated with it doesn't sound that ambitious, but in reality, we find anecdotally anywhere between 3 to 10% of payments are failing because of this insufficiency, incompleteness, or incorrectness of this information. And we've heard that to repair these payments costs anywhere from 25 to 35x a payment with straight-through processing. So it could be 3% of your payments, but repairing it, you're essentially eliminating a cost that is equivalent to the entire cost of all your payments with straight-through processing today, or more.
I think that's a real powerful message. I know, and we've talked about on the podcast about defects create a huge issue and inefficiency, both in terms of transaction cost, ability to forecast. what an organization has, and your study right there is a 3% error rate with a 25 to 35 times. That costs as much as all the effective transfers. So I think that's a pretty significant development. So the use of this API to, I'll call, ping or verify the account number and the holder and get that back. So the banks can build that in. When a payment's coming through, they can do this verification, and then if it fails, they can stop it before they send the actual transaction. Is that the purpose of that? And then I want to get into what a corporation may want. Mm-hmm.
Yeah, and I think one thing that distinguishes this pre-validation service from this case resolution service, I love it. I love talking about it. I welcome everyone to take part in that too. Traditional GPI, the tracking, the same day value, these new instant corridors. I think all of our initiatives are quite exciting, but I think the pre-validation initiative in particular is a little bit unique in that these aren't tied to specific messages, right? So these don't have to be payments instructed via 103. These don't have to be wholesale payments. These don't even have to be international payments, right? So as long as you're a SWIFT participant and you have that capillarity such that there is, or that network effect, such that there is a Benny Bank that can be pinged. I mean, we could be talking about domestic payments, micro payments, retail payments, and then you get to start to think about how to create really interesting solutions. So obviously, we're going to work together with the banks to standardize a way to expose this service, probably via API, to their underlying corporate customers. But then you think about like small and medium enterprise, you think about retail. I mean, the normal person is not good at typing in like bank codes, right? We know this because we've had generic reference data APIs for a few years. So like when you walk into a bank or when you enter a bank portal and they ask you to enter a BIC, I mean, or a SWIFT code, the average, at least person in the US is going to be completely shocked and have no idea what you're talking about. It gets worse at the account number level because they're very unique. So I can imagine a very interesting situation where like I got a cousin in Barcelona. Maybe he was doubting that the U.S. Women were going to do so well in the World Cup, which I'm very proud of, and all my Belgian colleagues are probably a little mad about. And we make a bet, and he's got to do a wire transfer over to me. It'd be great if, let's say, he's in the portal of his bank over there and say Barcelona. If he starts to type my account number wrong, it would be an awesome experience for them to be able to ping my bank, the beneficiary's bank, and maybe give a little pop-up to be like, hey, maybe you should text message or send a WhatsApp to your cousin because we don't think this is the right account number, right? So I can see very cool user-based experiences beyond wholesale, also down into the retail world.
So the applications down the road that might impact a corporate customer directly in addition to the banking side. So if I'm a bank portal, I'm at a bank that uses this, if I'm typing that information today, could I get a message that there's no account at this bank? I'm sending a payment to someone in the UK. I've typed in the name and the number. They could make an API ping for that and tell me that this is not validated at the other bank.
Yeah, precisely. So when we see the corporates taking advantage of GPI today, it's a good vision into how pre-validation would probably work for them. Again, SMEs, more often than not, log into like proprietary bank portals where the banks have taken the tracker information and exposed it in a way that they've white labeled the basic tracker functionality, but they also have so much more information about their own customers than we do beyond tracking. So they've created some really powerful, cool portals that a corporate can log into and track the payments. Probably an SME or even a mid-sized corporate if they maybe have one bank. But we know that corporates use SWIFT traditionally because they want a single window and all their payment initiations and cash positions. And to that end, and maybe I'll move a little bit out of pre-validation and talk about also basic tracking here, we have been looking at ways to facilitate these multi-banked corporates. So we do have an initiative right now called GPI for Corporates that will align how tracker updates are sent to corporates from banks in a standardized way. And we've obviously worked with all the TMS and ERP folks on that so that they can have interesting dashboards at the TMS level around cash positions, how to hedge, etc., despite corporate using 11 or 35 or 100 banks. Today, that's basic tracking. But again, the tracking transparency of fees and beneficiary credits. But again, these were the same services that were bank only or bank portal only a year ago. So once pre-validation, case resolution, and the stop and recall service are effectively evangelized throughout the bank, and they have the right flows and right corridors open, probably next year we're going to do the exact same thing that we're actually just launched last week, June 24th, for corporate tracking, but for pre-validation, case resolution, stop and recall, and other interesting GPI initiatives.
So yeah, you mentioned exposing that through a bank portal. So a corporate person in treasury or AP is logging into a portal. There's a potential to have that fed back through that. But if they're using a treasury management system or a payment hub, there's the future potential of having that feedback process, whether it's pre-validation or other activity, come back.
I'd say future and current. So future for pre-validation, but the actual tracking was in an early adopter stage and is officially live for all SWIFT connected corporates for about 5 days now, and we're really happy about that.
So this is being recorded at the very end of June. So that's awesome.
Sorry, important qualification there.
Yeah, no, I mean, so whenever this goes live, it'll be a little bit older, but that's really, really interesting information, and it's exciting to see how it extends the value of the network. From the bank to bank to the corporate user. That's a particular area of interest to us. So that's what's just happened or has happened with SWIFT GPI and some of those services around there. What's it being extended? You talked about settlement of smart contracts, the universal confirmation, moving into the supply chain. Anything you want to talk about what's far off? Again, any summary items there before we move on?
Maybe I can do mid and far because I think there's a distinction there. So as I noted, and I can't emphasize this enough, that GPI, what we do in GPI, I mean, we have product managers at SWIFT. I mean, I'm one of them, and I hope I feel valuable sometimes. But it's not our business or our decision alone what these things we develop are. They're based, again, in those user groups where we get together, people raise these concerns, possible functionalities, and then we evaluate in that general election, if you will. We actually just held one of the general elections for 2020, so I hope to have some exciting stuff to talk about. But even within the priorities for 2019, I noted that the case resolution, the pre-validation, the instant corridors, those will be built no matter what. These are things we're pursuing. But we also determined a few proofs of concept that we are doing right now. And then as a distinction, maybe I can talk a little bit about some of the things we're looking at for 2020, 2021, without any firm commitment yet on how to do those. So the proof of concepts, I think, are quite exciting. We've talked about a request to pay API. So you can think about like direct debit or, maybe a more human level like Venmo when you request a payment from a friend, for perhaps they buy you a drink at a bar or tickets to a concert. We want to have a request to pay API such that you'll be able to do that cross-border. And again, that goes down from people asking their friend to pay them for that subway ticket they bought, when they were visiting New York, all the way up to, corporates hopefully doing it with the interesting metadata like invoice numbers and stuff, right? The second one, and this one has been, I think, tremendous amount of interest from a lot of our participants. And just to qualify, to participant this is the GPI link I'm going to talk about, by the way, which is the settlement layer for smart contracts. Just to qualify, if you're interested, you do actually have to be on GPI and live. But what we did was we announced with R3 a partnership for this POC. And they've been great partners. We've been looking at, I think, two of their platforms for trade finance called Voltron and Marco Polo about how to provide a settlement layer around smart contracts on a distributed ledger platform. We're looking at other platforms. We all know that like Hyperledger, Consensus has a lot of Ethereum-based products or projects. Digital Asset are out there. And we realize in the verticals, it's beyond trade finance into maybe commodity trade finance, insurance, and the securities and derivatives world. But the basic idea is, I like to tell a story usually about like mangoes, right? Or mangos, if you like them. I could imagine a world where I am a buyer of mangoes, right? I enter into a smart contract with a seller, and there are certain conditions to that contract, right? Like the crate of mangoes has to weigh a certain amount. Maybe it's on a boat from the Caribbean. I don't want those mangoes going above 95 degrees during the entire voyage. I want it to arrive at a certain time. I want the pallet to be certain dimensions when it arrives. And guess what? With the Internet of Things and sensors, you can guarantee all these things, right? So it'd be great if when all these things were guaranteed via these oracles or third-party sensors, when the mangoes hit the port, knowing that all these conditions are met, it'd be cool if you could pay for the mangoes and the mangoes could be delivered in an automated, in an automated way according to the conditions of the smart contract. The problem today is that most smart contracts use like native tokens because you want this atomic swap of like mangoes for cash, right? The problem with using tokens for that though is number one, there's not a lot of regulatory certainty around them. Number two, there are some stable coins, but the vast majority of them have a lot of FX swings. So I don't want to be paying, I want to know whether I'm paying $100 or $5,000 worth of Ether, say for these mangoes, right? And then additionally, just the network effect. You don't have enough participants to play with, and that could be just at an operational level, like how do I pay you, or at a KYC compliance level. So what we were considering, and what we're doing right now, in fact, is that if you can meet all these conditions, right, the mangoes can make it to the port. There can be an API call to initiate the payment directly to the bank, triggered by the smart contract. The payment for the mangoes can be released, and because all GPI payments are confirmed, at the exact moment of confirm, I can have the mangoes. I don't know if that's too complicated, but I think it's probably the easiest way to visualize how you can have these smart contracts and make them truly smart. Because if there's not delivery, if there's not an atomic swap or delivery versus payment of the goods based in the conditions of the smart contract, it's not a smart contract. It's the same contracts we've had for, 4,000 years, right?
Yeah, a smart and integrated contract of pieces. But I did want to ask you about how does the API process work with SWIFT? So a typical API, someone sets it up, goes from one organization to another directly over the internet. Are these APIs that you're talking about, do they run to SWIFT and then to the other party? How is the pathway of the interface working?
Yeah, great. Also, though, I do want to revisit a little bit after. Those are the things I said the POCs we're building this year. There's some future stuff I can talk about, but we'll get to that after. I think for the APIs, it's important to understand, these are APIs, right? They work like APIs work anywhere. You put things, you post things, you delete things, you get things. That's all you can do with the API anywhere ever, right? The difference I think that SWIFT is bringing is that by routing them over the SWIFT network, we're providing a lot of important value-added services when we're talking about confidential or impactful financial information, right? So we have a framework for identity management. We have the network effect of the network. We have the governance of how these things work and the reliability. And I think most importantly is that, we're a network, we're a cooperative, we're a software provider, but we are a standards body, and I think standards are going to be essential in this API journey. It feels like all these banks are on, banks and governments, because we do see, open banking initiatives happening at a regulatory level in many very important jurisdictions. So if there are to be APIs, it's important that a payment is represented in a certain way, that a trade, a letter of credit, that a payment confirmation, that a FX confirm are, codified in a way that whether you, as a corporate or as a fintech or as any underlying customer, that when you're communicating with bank A, bank B, or bank C, there is a standardized and uniform way of representing those transactions. And then ideally, if you're using the SWIFT network, a single window for doing these in a way that guarantees security, reliability, and identity management.
Yeah, so not to ask the same question again completely, because I think you answered it, but maybe to get a little bit more nuance there. So it's obviously leveraging the network, the SWIFT as a body that sets standards, enforces rules, provides that independence and identity management. When this connection occurs, is it riding through the existing pipe into SWIFT that a bank may have or a company may have, or is this a separate channel? How does this work? Because it sounds like it goes through SWIFT to the other, like there's an API that comes in to SWIFT and an API that goes out of SWIFT and back and forth. Is that how it works?
Yeah, so it's done over the SWIFT network, and because security is important, we authenticate all the sessions for the API calls. And I guess this is for the more technical people on the call, although I'm probably not the most technical person always, but I have a pretty good understanding. We're authenticating the calls using the SWIFT gateway. or authenticating the session over the SWIFT gateway such that these can be communicated over the SWIFT network. And then additionally, we're exploring, because it seems a little less development intensive and more aligned with API standards broadly, the development of some software developer kits so that people can leverage their existing VPNs to authenticate the session, which we think will be a lot easier to establish these services. In terms of counterparties, there's 3 counterparties to calls. 2 are SWIFT and 1 is sort of the community, right? Pre-validation, for instance, it's traveling over the SWIFT network, but the institution that you're pinging is the beneficiary bank directly, okay? In terms of things like case resolution, you are pinging the relevant party directly, but the first ping is to the GPI tracker, because then we're going to intelligently route that request. So that would be a case like stop and recall or case resolution, where you need to reach a party, but you may not even know who that party is in the moment. And then finally, there are some API calls directly to SWIFT because they're generic, right? So, and we hold that data. So do you want to verify a national ID code, like an ABA here in the States, or a sort code in England? Do you want to verify a BIC code, the SWIFT code internationally, a currency code? Do you want to check, bank holidays in a specific country? And those are the more generic calls. Juan Martinez, who's the head of our API tribe, often compares this to Netflix. And I think if you're a Netflix fan out there, you could think like these SWIFT-based calls are a little bit like Orange is the New Black, or like shows created by us. And the others are a little bit more when like Disney content or something ends up on Netflix. So the metaphor there is that banks can directly expose their valuable information over our network, but they're essentially exposing, their beneficiary accounts, or at least that's how pre-validation works. We're in some very interesting conversations about other services like net asset value calculations in the securities world.
Yeah, thanks for that additional dive, and I think you qualify as fairly technical in most people's mind. I know there's another layer which you really can't cover on a podcast for that, or I can't cover that particularly well. But you mentioned some of the farther away ideas. I was wondering if you could give us a quick run through and more summary, because I do want to wrap up with a few things on your advice and recommendations. So what's 2021 and beyond?
So one of the things we've been thinking about, and this is much longer and would involve the participation of other parties that are not necessarily banks, probably institutions like ANSI, and I think the UN and GS1 are the people who do the standards for how do you codify an invoice message or a purchase order or a shipping notice, right? Be it like X12 or EDIFACT are the standards they use. And then additionally, some things that SWIFT governs, such as FX confirms or trade finance, signals such as letters of credit or documentary credits. But we are envisioning a world where, things cost things, right? Things have a cost in the world, right? We're not just paying each other for nothing. They're associated with real world things. So I guess initially probably within SWIFT, because it's all on SWIFT and we govern the standard, we do want to look at if we can use the same tracking reference that we use on a payment on an FX confirm, right? So if I do a trade for euro, US dollar, that can have the exact same tracking reference as the payment associated with it. The same could be said of a letter of credit. And then again, if we can really start to coordinate with some of these outside parties, and frankly, let's be real, a lot of the providers of treasury management are also the same providers of, ERPs for corporates. It would be amazing if we could start to really get out there to the invoice, purchase order, and shipping notice world and really, push this UETR as a universal standard, and then additionally, make payments rich with a lot of interesting metadata.
Excellent. Yeah, so that the UETR, or UTR, as you're saying, is that unique identifier is obviously has a lot of success for things like reconciliation, easier process and matching, tracking, and visibility. You can see how that would impact every area of the business, from management and working capital, trade efficiency, reconciliation, auditability. Now, Daniel, I think I'd like to talk more on a bunch of those topics in more depth, but to keep the podcast in reason, maybe we could end with what advice do you have for a bank, for a corporation, and maybe for someone in the supply ecosystem? What would be a quick thing for them to do, to think, going forward?
Well, I would say recognize where we are in the cycle of any of these particular developments Is it the vanguard or is it the new normal? If you wait until it's the new normal, it's probably going to be a headache. And additionally, you're missing out on value, and there's obviously a competitive aspect to this too, right? Where, other folks are already rolling out these services and or taking advantage of them. So if you're not GPI, I would consider, looking at it, particularly when you think about if the tracking reference is required and the universal confirms are required next year. That's essentially all the development that, say, a respondent bank, a bank that only serves corporates and retail and not like other FIs, that's all the development you have to do to be a GPI member. So if you're going to do the work and there's a sunk cost, there is probably a good case for why you should be taking advantage. To those that want to participate in the new initiatives, we're very open. I think feedback is essential. And because we want these to be global payment, not just SWIFT or not just, specific verticals of payment solutions, we really need that participation of corporates, insurers, money service bureaus, investment managers, respondent banks, community banks, credit unions. So, it's not just that, we can help you out with this whole GPI initiative, but we really want your help because we want to take into account the vicissitudes and the variations of why payments happen, who handles them, who are the beneficiaries. It's a wide world of applications. And we want to ensure that we're accounting for everything. And I guess, again, don't think that, all these things are going to require an immense investment or that you have to do everything at once. We welcome GPI members, current GPI members, to join our case resolution service and then, prioritize doing the instant payments later or vice versa. And as regards the pre-validation, if you're connected to SWIFT, we welcome you to come on, and try it out. I mean, really the only requirement is that you have to be able to stand up a server that can be pinged with this beneficiary data, which is, I get we need project managers and legal to sign off on it, but it seems like an almost like arbitrarily easy task to do when the return is, again, fixing those 3 to 10% of payments that cost 25 to 35x your STP payments.
Yeah, excellent. Very, very excellent information, Daniel. Exciting, too, just to see how this is progressing both for banks and treasury technology providers as well as corporations. So I think there's a ton of value. Really appreciate the update. There's more information that you can read up on this about. We'll include some links in the show notes. That'll certainly be on strategictreasure.com/podcast within this particular session. We might be able to include some of those notes on the different podcast channels that allow for that data to be posted. So look for some shortened links or some full links about pre-validation, SWIFT GPI. So we'll put those out there for your use. Daniel, I want to thank you for your time. Appreciate you sharing your insights, passion, and some of the future plans on this.
The feeling's mutual. Thanks so much. We love to get out. And we know there's so much stuff going on here, and it's hard to keep track of it all. So we're always happy to come back and have a chat with you.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.